Good morning, Scott Riley, T3 Live. Welcome to today's morning call. Sorry it's a little late. Fridays are always late, plus the holiday, so I'll get right to it. Yesterday was blaring relative weakness in the high beta names. All the names that we watch, all the stocks that we trade, all the stocks that we were trying to hang our hat on 2-3 weeks ago on why potentially this lower range could stay intact, all broke to the downside yesterday. Fierce, first, a lot of F's, and I can't say fast. So with that said, there was just a lot to look at. You know, these stocks have been breaking over the course of the past week, and yesterday they actually, broke support, and you could have made money there. All right, in the last few months, you can make money short, you can make money selling resistance, you can make money on bounces, but it's been hard to short breakdowns. And yesterday they let you short breakdowns in some key stocks, and that doesn't bode well for the overall market. So take a quick look at the SPX first. If you look here, you will see this lower range. Obviously, here's your head and shoulders pattern that triggered to the downside. We've been in this range now for almost 8 weeks or so. Here's a high, a lower high, another lower high. So technically, the market can't even bounce as high as it was. So what are we looking at today? Today, you have this, just say yesterday's low of around 1138. If we break below this 1138, next one is about 1120. And then you have that other low that we put in around what? 1114, and then you have 1101. So, first line of defense will be right around the open. Okay, if you remember yesterday, in the last hour of the day, they did a squeeze. Okay, it was one of those squeezes that frustrates every trader around the world. But, I kind of was playing a little judo because earlier this week, everyone kept saying that, the last hour of the day, the market keeps falling apart, it keeps falling apart. Well, the trend changed yesterday where they made the market fall apart early, and then around 3 o'clock when everyone thought we were just going to follow through to the downside after being up 250 points to down a big travel range, we would just fall apart. So lo and behold, they squeezed some shorts, sucked some money in, and now we're opening back down at the lows. So that's the area I'm going to watch first, that 1138 to 1140. If we could get below there and stay below there on a 60-minute basis, we could see a lot more cascading to the downside. But the one caveat, again, end of the quarter today, end of the year for some mutual funds today, so they might try and work a little bit to hold things in there. And then typically the first day of a new quarter, some lazy fund managers like they did last quarter might just want to throw some of their allocations into the market long, thinking we just came down a lot. So that might make it a little choppy. But if the weakness is there and the volume's there, don't care about what's going on behind the scenes, just know it could happen. Stay with it, because that just shows that we're that weak. Now, a lot of the high beta tech stocks all broke key areas yesterday for those clean shorts. Now, I'm just going to give you a blanket statement where they all came off of yesterday's lows. So, I would just say it's going to be tricky just to short them again with the big travel ranges that we've seen. So if you want to try and trade a little cute short versus yesterday's low, like right now the futures are down, they might try and take, Apple, Amazon, Baidu, some of these stocks kind of positive. So just don't have pressing shorts on the brain, because that was yesterday. If you look here real quickly at Apple, you will see the time to have shorted it yesterday was when it went negative, and then it traded through the low here. For some reason, my prices aren't coming up, about 396, and then it went all the way down to the 50-day. So I would trade, if you're looking at Apple, it's down $3. Maybe look to see if there's relative strength for a cute type of long versus area. But if it shows weakness like it did yesterday and it can't hold this area, you have a really no support until we get down to about 380 and then almost down to 370. So use that as a gauge. Even Amazon yesterday broke hard. This was a nice one to trade. And this was later in the morning move. Once it broke below this 226, I think guys got aggressive and it went all the way down to 216. So now perhaps trade it versus this low. If you're looking long, maybe you get a cute little scalp versus this area. But if it can't hold this area, you're going to be seeing a 211 really quick. The weakest group has been the Chinese internet stocks. Thank God for Sina. Not to be long, but as an indication, because this stock is always weaker before everything else. And yesterday, it was down $3-4 before Baidu even went negative. So I think people didn't make as much in Sina, but then they saw, okay, this group is weak. Sohu was making lower lows. We shorted Baidu, I think, through that 120. If you look at this number or look at this area, we've been talking about how this stock has been broken ever since it couldn't break above this 149. Here was your sell signal. If you got out of the way, great job, which most people did. And some people even got short. Here was that wide range bar down, a little bit of a reflex bounce, nothing. And then this was your break yesterday. Below 120 was a great short, went all the way down to almost 106. So now I would watch it versus this low here of about 105. You could try and trade a little bit long versus this area, but just don't get stubborn because, obviously hard to short considering it just fell 40 points, in less than 2 weeks. So just keep that in mind. But again, keep in mind that when these things break, it's really hard for them to ever come back. And it just actually filled this gap. So just watch this area. And I'm not looking to press these things short at all. Sina was the one that broke first fast, and that was right here. If you guys look, this is the reason why we watch these uptrends or these ascending channels, and we get out of the way when they break. Because look what happens when it broke. You could, we talked about getting stopped out right around here. Actually, maybe even a little higher, but whatever. So if you got stopped out here, you saved yourself almost 40%. That's what you have to do with momentum stocks. So with that said, same strategy. That's the weakest one. So maybe if it gets a little stronger, you could see a little bit of a cute bounce in the last day of this month. But it's broken. I've been talking about this group being broken for almost 2 weeks now. Then I also mentioned the casino stocks have been getting weak. I don't know why. Some people are saying a typhoon that could be coming to Macau. All I know is that their bounce backs weren't strong. They've been showing relative weakness going down first, where they used to go down a little later in the day. And Wynn broke a lot of key levels here. Wynn, if you look at the chart here, this was that gap down break. And really, it couldn't get anywhere. It couldn't even refill this gap when most stocks filled the gap, on that bounce. So this was your out. This was that 135. Off the charts, we talked about stopping yourself out of 135. Some guys even got short. And if you look even at the macro pattern here, you have a bit of a head and shoulders pattern that's just starting to break. It did come off the low. I guess watch it versus this 120. But if it can't get back above 125, 126, or close above this area, this could see a lot lower prices. Here's your left shoulder, your head, your right shoulder. Doesn't look good. And LVS also does not look good. LVS, on a short-term level, I think 43 was a stop. Same type of scenario where you had this gap down here. Remember we talked about that breakout failure, sell signal. You never know what it's going to lead to. Well, looky here. It led to a 10-point move lower. So anyway, if you missed that, this was your line in the sand. This was this recent pivot. You had your gap down, sideways action, bear flag, continuation. So now I guess if you had to trade it today, trade it versus just like the same thesis versus 40. And if it doesn't hold there, there's no support really all the way down to this 37, 36 area. So just know there's a lot of damage. And when things are dangerous, they move further than you would expect. Yesterday, the banks tried to be strong. I'm not getting excited about them. I guess you have to see if it continues. Something like Goldman Sachs didn't make new lows. I guess you could say, I put on the price point sheet, but whatever. If it starts to go positive, maybe you could buy it above 100, but really for this to change, it's got to get above this like 105 and stay above it and break this downtrend. I don't know why it would, but I've seen crazier things. You want to look at one more, JP Morgan also. I guess if it were to get above 32, it has some room up to this 32.70 and then to fill this gap. But I don't know why these banks would bounce, but then I guess that's why they might. Yesterday, again, they tried to be strong. Just know that was, don't get excited, but that happened yesterday, so look to see if it happens again. FCX seems like it's making new lows. Seems like a year ago we caught a cute little, day and a half long in the OAHs and FCX and XLI, and all it was a day and a half, and people want to frown upon day traders or cash flow traders or quick active traders, but if that's all the market's giving you, that's what you have to take from the market. I'd love to be long 15, 20 stocks and high five 52-week highs. It's just not what we're in. At this point, I see weakness, I see damage. I think capital preservation is key, and making money short has been the thing that's working. We can't control the economy, we can't control politics. All we can control is our keyboard and how we approach the market, and it seems like everyone's having some fun. So that means you know exactly what you're doing. Stay professional, stay prudent, and we'll continue to navigate these markets. Scott Riley, T3 Live, the morning call. See you at a lower, hopefully a recap today, but probably be earlier than the close. Thank you.